And we are live.
Welcome, everybody. Momentum Monday, end of March, following up on a really nasty S&P week with my friend Ivan. Ivan, say hello.
Hey, Howard. How are you?
Good, my man. Sunny there? Sunny here in Phoenix.
Not really sunny here. It's kind of cold for San Diego, actually, but I don't complain.
All right, Catalyst hat on. I'm about to go for a bike ride after this, so let's go around the horn. So let's pull up charts so that we don't have to look at us.
Okay, let me share my screen real quick. And let's fix this. Can you see my screen?
I can. So now people, whether we're talking, they can just see the screen, right, Ivan?
They're only seeing my screen, yeah.
All right, so we're going to start with, well, I was writing a lot about last week about how price leads sentiment. And I think the chart of the day is kind of JC's, the island reversal of the NASDAQ. I think that was just interesting because I want to talk about how hard markets are. We had the changing kind of scope of the market begin in February with the little flash crash. And I think what the NASDAQ did back in early March with green bars there at all-time highs was really, you circle those for everybody, Ivan? Yeah. So up there, I mean, there was just every reason to be cautious still. But as a price and a trend investor, boy, that was a lot of all clear. And there was a lot of enterprise stocks working. We had recommended Okta, Mule, Mongo. We had Zendesk. And you can see from the green bars there in March, those were where I was focused. And well, you can see even after the correction, Mule got bought out, but you can see even after the correction, these stocks haven't moved that much. So, but the rest of the market turned a day later, and it's been ugly. It's been hard to get out of the way of the selling. So now part of that is Facebook. I mean, Facebook basically was outed for stuff we've known they've been doing. So now let's pull up Facebook. The catalyst for this recent crash, and again, it's not all Facebook's fault because everybody knows that Facebook is selling data, was you can see Facebook just kind of marking time, never really participating with the NASDAQ, kind of peaked in February, didn't rally back that much in March, and really was the catalyst for this NASDAQ mini panic last week. And I was on the streams this morning buying a little Facebook at 151. It was the only buy I made today because I'm super kind of nervous by the price action. But Facebook at the low 150 just seemed interesting, and I did stick a fork in the ground there and bought a little. So that worked out today. But you can see the hammer that Facebook put in. So after 3 or 4 days of relentless selling, people finally really did make a stand today on Facebook, and that just helped the markets in general. They were oversold anyways in Facebook. If you were prepared, this morning was, while a little bit scary, really, kind of wiped out almost all of 2017's gains. May I have it at one point?
Yeah, I mean, take into account that Facebook was up 500% for the past 5 years. So a 20% pullback, it's like, it should not be the end of the world. But yes, if today's level 150 did not hold, I mean, the next potential support is over 130.
Yeah. Now, that was a trade. I could care less about Facebook right now. It's kind of an 8 to 80 company of mine. No one's going to be able to stop them. They're kind of like Equifax, Experian meets the devil. But let's talk. And it rallied late. So let's go to the markets. Let's pull up the NASDAQ first.
Let me go to daily then.
Yeah, you can see the markets were hitting their 200 days on Fridays at the close. So it looked pretty ugly. You can see again why. I don't know if we have the S&P 200-day, Ivan, or the NASDAQ 200-day.
This is the 50-day, actually, the blue line that you're looking at.
the blue line, which is now actually just ticking finally down. But can you put a 200-day in there?
Sure. I mean, I can switch it to 200. Yeah.
The machines have this programmed in, and the 200-day is just a major trend. You can see almost to the point on Friday. Well, it wasn't fun. There was a lot of professional traders going home at the weekend. They had to get long at the 200-day. So, if you don't do this for a living, it looked really bad. But a lot of the pros just use these levels. A lot of machines put their buy orders in at the close on Friday, and the world did not implode this weekend. And still in an overall uptrend. We got that bounce today. Most of it came late in the day. And I think a lot of that came late in the day because Facebook decided to rally along with the NASDAQ. So today, for those people that didn't panic last week, good for you. There was a great bounce today. But I think what really matters now going forward is, do these lines hold? And for now, they held. And so now you have to invest accordingly. So let's go to what's working. Enterprise still working, Ivan, but let's go to your list and see what's working.
Okay, let me pull up the SO50 list real quick. I mean, there was a lot of green today, I mean, which is normal when the S&P 500 is up 3%. It's normal to see a sea of green on the SO50 list. We continue to see, I mean, the same names, semiconductors.
Nothing changed last week, except there was a lot of red, but the list did not change. I mean, you still got Domino's there on the consumer side. You have Netflix, and then a lot of e-commerce and enterprise software. It looks
like. Most of those trends, have not changed. And yes, last week the list took a hit with the rest of the market, but overall, year to date, it continues to outperform substantially, which does not happen, in bear markets. So, this is one of the signs, I think, that the current correction is just another garden variety pullback within a long-term uptrend.
Yeah. I'm not so sure, because we definitely lost a leader in Facebook just in terms of government regulation. I personally think rising interest rates, chatter about walls, instability, finally weighing in on the government level. There's a lot of people tired. That's the way. What's changed since last Monday is stuff we talked about last Monday. Is it's the markets have had a good run, and there's some definite macro problems around interest rates and around just it feels a little bit tired out there. But at the same time, we are working off low interest rate basis. So anything really stand out to you, Ivan?
Yeah, definitely. I mean, crude oil has been really, really strong. I mean, it's near 52-week highs. And there are quite a few energy stocks that are either breaking out or setting up for a potential breakout. I mean, we have the refiners. We have, some other oil and gas names just, slowly breaking out. And since most of them are super correlated to each other, if you want to be long that.
Well, the refiners, you're very leveraged, so these can have violent moves.
Yes, I mean, as I said, they could have. They're very volatile, but they're very highly correlated. So you can just own the, the ETF instead of owning the individual stocks. For example, we went long this one today, which is like 3 times long oil and gas stocks, for a trade. We'll see where it goes.
Okay. What about solar?
Solar, it's super related to the move in gold, to the move in crude oil. For example, First Solar is looking amazing,
but it's looking better on a long-term charts than crude oil as well.
Of course it does. Okay, let me pull up a weekly chart.
It may, yeah. I mean, this.
I mean, if you can see that bottom here, last year in March, this is when it was kicked out from the S&P 500.
Yes, because passive investing is a thing. This goes to prove the lie of passive investing. They made an active decision to kick out First Solar, and the stock has tripled.
Yeah, and instead of First Solar, I mean, they added AMD. at the same point.
Oh, when did they add AMD? At what point?
Oh, exactly the same point, March 2017.
Oh my
so
God.
it's down like 40% since then.
Peaked? That's an interesting. I have to add that. Can you send me those two charts, Ivan, like with the points?
Sure.
Okay. So you can see that, like,
But so that definitely want to keep an eye on. It held very well during the correction, and as I said, I think the strength.
Hang on, sorry.
In solar is related to the strength in crude oil, and also keep an eye on defense stocks. You know, quite a few of them are showing incredible relative strength, like BWXT, for example. It didn't even budge during the recent pullback.
Defense stock, huh?
Yeah, like this one, for example, BWX is providing nuclear equipment and parts to the U.S. government, and you know, it's an amazing.
How far back does that go? That's a serious break.
This is a daily. This is, I think, it's a new all-time high. Let me go back to a monthly. So
wow,
this is a really long-term chart.
See, that back in there was all-time highs that were viable back in 2015 and hasn't had. I mean, how is that not showing up on SL50?
I mean, there have been quite a few other stocks, Howard. Like there are only 50 stocks.
Yeah.
You cannot really get them all.
Yep.
And another one that is strong, another defense name is HEI.
Mm-hmm.
Also very strong. I mean, it seems extended on a monthly time frame, of course. So it depends on your time frame. If you're a swing trader, maybe it's a good entry here. If you're a
but it wasn't just tech this last 3 years. So defense has just had an incredible run.
And of course
why did they remove First Solar? Was it market cap issues? Why did they swap First Solar?
Well, it was down a lot.
Is that the only reason why? So is it related to market cap?
Yes, it is related to market cap. When it drops under a certain level, I think the latest, it needs to be at least a $4 billion company, if I'm not mistaken. And I mean, as you know, the S&P 500 is basically a long-term trend following algorithm in a way. Mm-hmm. But so once a year, they just replace the weak performers with the strong performers for the past year, and sometimes, you know, this is an amazing approach to the market. You know, this is the way to capture Netflix and ride it, you know, for 5-6 years for 1,000%.
Yeah, but you know, then they have to add First Solar back as it passes other companies. I'm confused.
Yeah, it's been in and out a few times. I mean, but last year it was very comical, and when they kicked it out basically near the lows, and it went up 200% since, and they replaced it with this one, AMD, after it went from 2 to 15. After it had that amazing run, you know, it was added to the S&P 500. You know, ever since it's down 40%. But that doesn't mean that the S&P 500 doesn't work. You know, over time it does.
It's an active portfolio.
Just we know when you buy it, just know what you're buying. Just know that with a little bit of due diligence, you can do better than that. Better than that committee of 12 people that are swapping stocks once a year.
Mm-hmm. Okay, so solar I was going through IBD's list. SEDG is another solar company.
Yeah, they've been very strong. Also, I think it's an Israeli solar company.
Only up frickin' 600%. So you know you've got to have a list that.
Here's the French one. They're not really doing that well.
Yeah.
But yeah.
So there has to be some, and then TAN is the ETF.
Yeah, TAN is the solar ETF.
So it's just a couple specific stocks that seem to be working.
Yeah, for solar, it's one of them. Since they introduced, I think, tariffs on imported solar panels, for solar is one of the companies that benefits.
Mm-hmm. Okay, so there you have it. I think, you know, for people that didn't panic last week, I think the lines have held for now. There's looks like a little rotation in the market out of tech and into some you've seen into some energy stocks. Doesn't get me excited at all. I'm still focused on tech. I kind of think these defense stocks, I wish I understood them a little better, but they're so reliant on government spending that I just have never gotten excited about them. But obviously, I think it's tied to like all this money that the budget went through. Is there any infrastructure stocks that like is there an index that follows all this?
I'm not familiar with it, but as I said, all the stocks that would benefit from
there has to be a defense ETF.
I have to do some research on that. This one, for example, it's an SaaS company that helps universities and government institutions to prevent shootings in a way. I don't know how they do it, but in the past few weeks, they've been making the all-time highs.
Last year, very interesting.
Yeah.
ShotSpotter, really good name for the era. Evilly named. That's an interesting stock. It's not on the SL50, is it?
I think it is, or at least it used to be up until recently. Yeah.
And that was a hell of a breakout there at 19 to 20 back this year. Yeah. So you got to focus on. So let's go back to the list. And if we scroll through, what's coming new on the list here?
New is the energy name, that COR, which just showed up on number one.
COR, yeah.
This Chinese Tinder, Momo.
Domino's back on the list. Quidel, oh yeah. QDEL, that's been an incredible stock. That's just showing up on the list new. Momo.
Yeah.
What else is new? 1 week I see there is. So there are PayPal showing up for the first time, even though it's doubled.
Oh, again, it's been in and out a few times. So.
In and out?
Yeah.
Methanex, specialty chemicals, health equity, so health information services. So there's some companies there that people haven't heard of. You got to just keep going through the list. This is at marketwisdom.com. How much is it, Ivan, a month?
It's just $99.
Yeah, if you're into what we do, you have to sign up for Market Wisdom. It's just, I think it's the best list, and getting Ivan as a mentor around this stuff. But there's some new names. It's interesting. Health. The enterprise software continues to work, and
it's the whole sector, the whole industry, enterprise software, it's continues to be extremely strong.
Yeah, the valuations are getting silly, even on. Again, I hate using the word valuation when you're talking about growth stocks, because these companies tend to defy valuation, but there's just so few of them that are public. And I think you're just seeing this tax breaks to corporations. It's showing up in weird ways, and this kind of just makes sense. So hedge funds are just chasing these companies, which are expensive by any multiple. But if you look at what Salesforce paid for Mule, which is one of my recommended ideas, I mean, they paid 21 times forward sales. So, not for us to judge what's overvalued and undervalued. We're kind of letting price and hot industries drive this. So I think defense, I think there's some specific solar. I'm going to stay away from energy, but because it bores me. But we'll come back next week.
Yeah, but for solar, it's an alternative if you're afraid of oil and gas stock.
Sure, but I feel like it's a chip company, but there's something going on there. I love the fact that the index has dumped it. It'll probably start getting back into certain indexes based on its market cap, based on its tripling. So there could be just a lot of, pent up institutional buying that has to happen if something after this correction I don't know when they rebalance. How often do they rebalance these indexes?
Usually once a year, but it varies.
It does vary. They're not people. I thought people kind of guess this stuff.
Well, they have a committee of 12 people they have certain criteria that a new stock needs to meet, and they sit a couple times a year, I think, and they just decide.
Go back a little longer on First Solar.
Yeah.
The Phoenix company, I got to do some work on this. And that is just
So it's back near multi-year potential resistance.
Yeah.
So if it clears this level, probably
just have to close your eyes and own a little bit here.
Yeah, let's go to a monthly real quick.
Well, you're never gonna that bubble in 07, 08 was something to behold in solar. I remember that. So a lot of new shareholders. This is like taking out 2011 highs. So okay, let's end it with that. Ivan and I will send me that AMD versus First Solar chart.
Sure.
All right, everybody. Have